Is up. How you doing, guys? Welcome back to another stream on Crypto Down Under. What do we got? We got a bit of a sideways choppy market at the moment. How you doing, buddy? Pretty flat range so far for the weekend, hasn't it been? $23,000 has been a magnet for price. It's just been tied to it over the last how many hours has this been? Like, look, as soon as we hit 23 again, it's been 16 hours of just crabby action. Sean, how you doing? Lad is good, 100%. You know what's good about it is that we're now normalizing prices above $22,000. You know what I mean? 22,000 is like the new homeostasis. Now, homeostasis means like baseline kind of thing, like your normal. So in health, like with your body's homeostasis is where it feels the most comfortable. Like, let's say your body likes to be around 140 pounds. When you gain weight, your body wants to come back to 140 as your homeostasis. So that seems to be like what we're getting now. We're trying to build a case or build a reason to stick around 23K, high 22s, low 23s, Let me get the definition for that word, homeostasis. Here we go. Homeostasis is any self-regulating process by which an organism, in which case we're talking about Bitcoin, tends to maintain stability while adjusting to conditions that are best for its survival. So in a way, I see Bitcoin as an organism because the thing that drives it are human beings, and human beings are organisms. So inadvertently, crypto is a life force like Bitcoin. All markets are driven by humans for the most part, right? Yes, we use tools called algorithms and bots to automate and efficiently, direct price action and that kind of thing, but they're all human invention. So it's, as much AI as you apply to it, or as much automation and robots and stuff like that, it's all still a result of human beings. It's all organic, right, to a degree. So yeah, anyway, as far as price settling into this area, I think the longer we stay here and establish proof that there's support above these lows, the more of a case we can build for some kind of, rally up to fight new highs. I mean, we had it back here too. We were feeling pretty. We were feeling the the tedious nature of this price action here, but the lows stayed above a specific threshold here until finally, we got the pop that we were after. We were looking for that, to get us up to the next level. So I feel like, yeah, we're sort of going through that same phase again. However, it's been drawn out a lot longer this time. So we've actually maintained price. There's a lot of support up here. It seems as though every time we do dip below 23,000, there are a bunch of people lined up to buy that dip, to buy the pullback, right? Because they're optimistic of what's, to come. The only reason you take a position is because you see a potential trend continuing in the opposite direction, right? After the pullback. So what else are we dealing with here? You can see these rectangles are the weekends, which I always like to bang on about, I know. So if we're classing that as the first weekend, this was the second, and now we're into our third weekend. Now this weekend's range has been a lot tighter than the previous two weekends. That to me shows that you know, perhaps that volatility, well, obviously the volatility has been really squeezed down quite low. So what does that mean for prices, for, you know, activity? It's similar to what you get with a Bollinger Band squeeze, right? Like when the Bollinger Bands tighten up, just like here, the result after the fact is a return to volatility. So it's like, you know, compression, expansion, compression, expansion, compression, which is, we've been compressing for quite some time here now. And I think there's going to be an expansion. Now, whether that goes up or down, that's yet to be seen. But these purple lines here I have are like, sort of like the boundaries of this range, I would say. And they are basically the highs and lows of last weekend. If you can see that. You can see the rectangle from last weekend. Now, yes, there was some activity outside that boundary. However, it wasn't, you know, it was short-lived. It was just a wick. Little bit of action outside. What we want to see is actual candle development, like, you know, this kind of thing up at a new level, you know? And if not, then, well, let's get this show on the road. Like, if we're supposed to correct, then, you know, let's do that. Maybe that's back down to 20K. Now, let me remove some of these, or just hide some of these drawings and things. And we'll look at, I'll even hide the Bollinger Bands. Just want to look at the raw price, because I want to do some measures with the Fibonacci retracement tool. So on a broader picture, let's go up to the daily chart actually. You can see that was our macro falling wedge. There's the all-time high up here. Now that's a linear wedge that we were in. We broke out of that linear wedge even before the FTX crash. But if you take it logarithmically speaking, only recently have we broken out of the top, and we're still waiting to see if there's going to be a continuation or not. But okay, let's go back to linear. Let's turn off this wedge formation, because we just want to look at the raw candles. I'm going to go full screen as well, so we'll get rid of that side pane. And I think I might go to the weekly and zoom in on the structure. So there's all-time high, there's our 2022 low. So that's the lowest point since the all-time high. So if we're talking about returning to the all-time high at some stage, we want to know what stage of the journey we are back to it. So there's our all-time high, position 1, right? If we want to make a full retracement back to the all-time high, that would be called a one-to-one retracement, like a 100% retracement. So if we drag down to the lowest point, which is here, we can see we're not even 23% of the way yet. So we haven't even hit our first tier. Now that first tier, you can see hits at $28,100. That's the first, like, sort of big, I guess, weight or checkpoint, I guess you could say. That's how I sort of view these Fibonacci levels. They're like checkpoints. You know, you have to check them off as you go up. And, you know, there's bound to be activity off those points, not to mention off the, you know, the support and resistances and market structure that we've got going on too. But anyway, strictly speaking, strictly associated with the Fibonacci levels, we haven't even come up and met 236 yet. So to me, what does that say to me? That says to me, there is a lot of upside potential still. Like, yes, this was just an initial push, and we may get a pullback, like in the coming days or weeks. We may get some kind of rest. But, you know, every impulsive move does take a break at some point. If it is part of a larger uptrend, then it is just a 2 up, 1 down, 2 up, 1 down type scenario. So we've done our 2 up. Like, let's see what, you know, the following days have to offer. Now remember, we do have the federal funds rate coming just around the corner. So that could be something that ignites the next move, you know, whether that's positive or negative, that's yet to be seen. My sort of like trying to remain unbiased, my sort of hypothesis with the funds rate is that it will come out at 25 basis points as you know what the forecast is. So let me show you on the calendar here what we're looking at. So February, there's the funds rate. It comes out on the 2nd of February for me. Now for you guys in the US, it's the 1st of February. Let me go US just so it makes sense to you guys, because I think the majority of the crowd here, of the audience today, is American, at least by my analytics on my YouTube channel. The bulk of my audience is from the US. All right, we'll go back to the calendar now. So this is it's currently 6:40 p.m. Eastern. You guys aren't in daylight savings yet, as it's winter, I believe. So this is just GMT -4 or -5 or something like that. So yeah, correct me if I'm wrong. It's currently 6:40 p.m. in the US, or is it 5:40? Anyway, Feb 1, funds rate. How many times has the forecast been wrong in the past, you know, however many months this is, however many data releases this is? Just once. See that? In June of last year, that was the only time the forecast was incorrect. Every other time it's been coming in as forecast. So the forecast for this for this funds rate is a 25 basis point hike. Why 25? Because the previous result was a 4.5% total interest rate. And then they're suggesting that this time around it's going to be 4.75, so a 25 basis point increase to the funds rate. Now, in saying that, I still want to stress and make it very clear that we have to be cautious and be prepared for it being a 50-point hike. We know that the Fed is still hawkish. They want to remain strong and tough on inflation. Their policy is to have a tight monetary policy to combat inflation. Inflation still, you know, the last reading was 6.5%. That is still high. That's high inflation. Yes, we're off the peak of 9.1, but you know, there's still work to be done. We're only about a third of the way to our destination with the target there. Who knows if we're even going to hit the target? You know, some people doubt that we even will. Let me bring up the inflation chart. I do apologize if this bores a lot of people talking about inflation and interest rates, but it is the most important factor with all markets, crypto included. Crypto is not exempt from caring about inflation and interest rates, right? So we measure crypto in fiat terminology. Like we you know, Bitcoin at 23K. What is 23K? That's a fiat reading. We measure it against the dollar. So if the dollar matters, like if we're measuring it in the dollars, we have to look. We have to pay attention to, you know, what controls the dollars. That's the central bank, the Federal Reserve, the Fed, who sets the interest rate as a reaction to inflation. So here's the inflation chart. We know that we've come off a peak of 9.1% peak rate, right? That's good, optimistic. We're heading in the desired direction. Now the target is the yellow line, 2% target. This is our current trajectory. So the dotted line is, you know, if we continue on this path, we should hit that 2% target theoretically by, you know, July, August, roughly. So there's a website, as I've said many times before, trueflation.com. They aim to try and forecast inflation on a day-to-day basis. So, you know, in real time, basically. They're currently saying inflation sitting at 5.4%. Now 5.4 is somewhere here, roughly. So I have to adjust this. Current reading is a 5.4, right? And then we have to get this line to reflect that too. So 5.4 there, okay. So that's what they're suggesting. Okay, so that's all good. We know the trajectory, we know, the path that we're on. We want to try and avoid something like this, where inflation starts to head back up. That would be terrible. That would be a very bad sign for all markets and all situations, right? Now, for the next CPI, I'm calling for a roughly around a 5.8% CPI, and that is mid-February. Okay, so that's kind of like my prediction, based off like our trajectory and Truflation's reading at that time, because we know that the government, the Bureau of Labor Statistics, the BLS, they report CPI looking back at the previous month's performance. So the CPI, the next CPI coming out mid-February, looks back on January, so it's always lagging by a month. So, all right, now let's go to interest rates. I do have some notes on that too. I'll unhide them and let me zoom in. This is currently where we sit with interest rates, right where that arrow is. So you can see the trajectory of the 75 basis point hikes that we've been feeling, right? So if we had, like at the last funds rate decision, if it was another 75 basis point hike, we would be somewhere up here at 4.75% interest rate already, right? But they did a 50. It was 25 basis points lower than that trajectory. So you can see there was a little bit of a softening on the rate hikes. So that's good. That's optimistic. We only hiked by 50 basis points as of the last interest rate release, right? Now, the one that matters, the one that we're looking at now, which is coming out on, what is it for you guys in the US, the funds rate, the 1st of February at 2 p.m. So a very comfortable 2 p.m. in the afternoon on Wednesday. This Wednesday coming up, guys. Now, there are, I don't see any results outside of this spectrum of 3 here. Now, this is kind of, I doubt it will happen, but it is on the cards. If the Fed pauses on rate hiking altogether, that is the most bullish outcome. If they were to just pause, that means we get a flat result on the interest rate, chart here. So that's the green dotted line. Now, the one that everyone's calling for is this orange. Like, this is the most popular forecast, and that's what we see on Forex Factory as the funds rate. The forecast is 4.75. Now that sits here, 4.75. You can see where my mouse is, it's reading 4.75. Now, a 50, if we were to maintain the course that the Fed was on and do another 50-point hike, which would be pretty damaging, that'd put us up here. That's the unexpected rate, but still possible. So I want to reiterate that don't rule it out as possibility, because it is still possible that they could do a 50-point hike and surprise everyone negatively. But yeah, look, the orange result is what is most likely to happen. As you can see, forecast generally comes in accurately as the result. I don't think that the Fed likes to surprise the markets. I think they like to keep as much balance and control, stability as possible. So, a 25 basis point hike is still a hike. Like, it's still an increase to the interest rate. So it's, you could see it as like, the Fed is still tightening the economy. Like, by no means is their policy going dovish, or there's no pivot in sight just yet. And rightly so. We don't want inflation to get back out of control. All right. So yeah, like that's the three outcomes there. There's a bullish outcome. There's an outcome that's sort of baked into the price already, I believe. And then there's a bearish outcome if they hike by 50 points. Like that would cause some kind of a dip or a retracement. I feel. So that's where I sit. That's where I stand. Now let's go back to the daily chart, and I want to look at the events, because we have the funds rate coming up soon, and then a couple weeks after that we get the CPI figures, which I believe will be an improvement off the last CPI as well. Like, so that should cause some bullish activity, I feel. I'm optimistic for the next CPI that's coming up. All right. So funds rate, that might be the recipe for a pullback, or we could continue to chop sideways until CPI, right? We got it's going to be a very interesting 3 weeks ahead, believe me. I think, there's going to be some volatility to come. It's not going to be more of this chopping business. So the only reason I feel is that we're sort of sitting flat here is not only because it's the weekend, but because we're like anticipating this, that, first and foremost, the funds rate decision. And then after we get that, we're going to settle in, and then we're going to start looking at CPI. Like, what's CPI? So I see there's a question in the chat there. What is CPI? It's the Consumer Price Index. And what it attempts to do is measure inflation, basically. So if the index is high, if the price index is high, it means inflation's high. So if the CPI is coming out at 9%, you've got 9% inflation. Like it's basically a direct reading of inflation. So we want to see CPI, which is this bad boy. We want to see it continue to come down. Now it's reported month to month by the Bureau of Labor Statistics, and yeah, you can see we are optimistically heading down with inflation. Perfect, right? Yep, there was a 9.1% inflation rate last year in June, right up here. That was June last year. This see how this comes out month to month? We get a result on the chart. So currently we're at 6.5, so it's down from the 9.1, which is good. We want that. We want to hit down here for inflation. We want inflation to be 2%. That's the sweet spot. That's like the perfect scenario. Now I've got the decades all drawn up here. In the 50s, you can see inflation was all over the place. The 60s, it was below that 2%. It was really good. The early 60s was beautiful. For the first 5 years in the 60s. Really nice. And then it started to pick up the late 60s into the 70s. Now the 70s was brutal. Look at that. Look at that inflation. The early 80s, the poor old 80s, had a lot of work to do to bring inflation down. There was actually a depression in the US during the early 80s, actually. But the high interest rates to match that is what brought it back under control. But look, we've had it good. We've had it good for like a good 30 to 40 years here. Like this whole zone here has been relatively stable. There's been a few hiccups along the way, but here's our GFC, the global financial crisis. There's the dot-com crash caused that. Bit of a shake-up, and then the recovery caused inflation to spike. But yeah, you can see for the most part it's been fairly under control. So this really big mountain, this spike to 9.1% is, there's no surprise. It was totally caused by the pandemic, right? COVID-19, shook the whole world, as we all know. So the economic impact caused this, perfect storm where we got huge inflation as a reaction of the quantitative easing that the federal government did, or the Federal Reserve did, to try to keep the economy moving, right? We needed to keep the world turning, you know. Someone had to keep the lights on, someone had to, you know, deliver goods and services that were vital to the world continuing to operate. Otherwise, you know, it would have been chaos, like more so, right? So it was a necessary evil. Like, we had to do that. Most countries did that. They you know, they put out stimulus. They kept things running. They kept the lights on. They kept the world turning so that we could survive. But now, like last year, we paid for it big time. You know, inflation was already heading up, but it really got to that peak last year. And, you know, the Fed had to increase the interest rates to deal with that inflation. And we can see it's been working. Like, you know, evidently, inflation is heading back down, which is exactly what we want to see. So things are looking optimistic, which is good. Until we get data to suggest otherwise, this is what we want. All right, that's enough banging on about inflation and interest rates. Let me turn on these price levels, key levels, resistances, my position, if you like. I'll put that up there. The recent TA that I have. All right, you can see that the chart's getting pretty busy. All right, if we go down to the one hour chart, you can see we're still dancing around 23,000. I think that's probably gonna be, that's kind of the theme for this weekend. You can see how tight of a box we're in right now for the weekend. So yeah, we're squeezing, guys, and you can see the triangle that we're in too. See this? So we had a low down here, point A, a high up here, point B. That's our highest point so far this year. A pullback, really nasty pullback, to make point C, which was actually a higher point than point A. But then our secondary push was lower, which gave us this triangle. So now we know the boundaries of some kind of triangle shape. It's pretty symmetrical, if you ask me. And yeah, we're squeezing up into this apex. Now this apex comes in, let's see, Monday the 23rd. No, sorry, Monday the 30th, 2023. At 10. Now I just want to see. I'm on UTC, that's why it's confusing the hell out of me. If we go back to Brisbane time, it'll make more sense to me. Okay. Yeah. So look, that's pretty much what's happening, guys. That's the theme that we're dealing with right now. I want to turn on the Bollinger Bands. Like I think I showed you that earlier on the 4-hour chart. You can see that the Bollingers are squeezing. I'll hide the drawings just quickly so you can see that. So yeah, Bollinger Bands squeezing up nice and tight, of which we expect some kind of reaction, return. You know, remember, contraction, expansion seems to be what the Bollinger Bands depict. That doesn't mean we can't do something like this where it squeezes even more, like for a long time. I don't expect that. I think we're going to get an expansion leading into that federal funds rate decision coming up early next week or mid next week. But yeah, that's pretty much where we're at with the Bollinger Bands. Let me go check out some other... let's do a bit more of a macro read on where we're at and where we could be heading. I'll turn off the drawings again just so we can look at it clean. All right. So we know the June low. This was post-Celsius crash, the June low. Remember, inflation peaked 9.1% at sometime in June. So it's probably like a double effect here. We got the, you know, Celsius collapse and 9.1% peak inflation happening all at once. Very bad, very nasty. However, we did get a rally off the back of that. So that was cool. It was a bit of a relief rally, right? Still a bear market, still a macro lower high, but relief nonetheless. That capped out the Fed really started playing ball. They were doing 75 basis point rate hikes to combat that inflation, right? And look, slipping. Now, there was a nice little bit of a relief rally. This was just after the Queen died. The Queen died on the 8th of September last year, Queen Elizabeth. And we had a rally the day after, basically started up the day after. We rallied right up to a peak of 22,800-ish, and then completely came back down, all the way back down, very, very rapid, back down to this sort of level of support that we were playing with. And then, we started to, turn a corner. We started to build again, didn't we? We started to build the case for a recovery. And then, as we all know, FTX collapsed. That was the next big black swan event that happened. And we crashed. We made a new floor, $15,500. And then, just kicked the can along the road. Everyone was extremely fearful after the FTX debacle, right? Everyone's talking about, that what's that buzzword that everyone was using, contagion, right? Everyone was expecting more fallout from the FTX saga, but it just didn't come. There was one, Genesis. There was a lot of FUD around Genesis, Gemini, DCG. A lot of FUD, heaps of FUD. Everyone was already terrified. Everyone's already scared. Everyone's already fearful, uncertain, doubtful of any kind of optimistic price action. So the FUD was thick. We were feeling it. But look, CPIs were coming out good. Inflation was coming down, and we got this nice pop. Brand new year, new paradigm, right? It's pretty much happened at the turn of the year, when we started to rally. The 1st of January was if you had taken a long position somewhere on the 1st of January, you would have been set for this recovery. I always sort of had a feeling that we would recover this FTX drop. I just didn't know when. I was calling it way too soon. I was saying, look, we're not going to be down here for too long. I feel like we're going to, recover this entire move. But I was calling it way too soon. And it took some time. It took a solid 2 months to get out of it, or more solid. Yeah, probably a little bit more than 2 months to get back up to where we were, and some. So we're on track. We really are. I think we're back above that nasty dip, that cup that we experienced. Now, the psychology of what has just happened, what do you think people are feeling after this rip up here? Do you think they're still fearful and terrified of the price? Do you think they don't want to touch Bitcoin anymore? Do you think that's the theme? I would beg to differ. I would say I think people are waiting, and I reckon a lot of people would be frustrated that they did not buy heavy down here if they didn't, right? A lot of people were looking back on the last month of action and saying, shit, why the hell did I not get in and take advantage of that? Or maybe they got in late and wish they had got in earlier, So if there's any kind of pullback on the cards, I don't think we're going to go back into this whole, shivering in the corner, fearful, doubtful mindset. I think the paradigm has shifted. I think the mindset has changed. The sentiment is totally different now. The stock market has broken a downtrend trend line since the all-time high, right? We had that really nasty, I won't open the chart, but a lot of you guys will know the stock market has been in a very nasty downtrend, and just recently it's broken that downtrend. We're still waiting on confirmation that it's going to hold and that it's not just a fake out. So yeah, that's sort of pending. I think the funds rate decision and CPI are going to play into that big time of where we head next, obviously. So we're just waiting for this weekend to play out. It's been a pretty common behavior for markets, crypto, over the weekend things go flat, right? Anyway, yeah. So okay, if we pull back, so be it. You know, I think there's going to be people lining up to buy the dip. If we dip, you're going to get a lot of people. There's going to be a lot of demand. We can already see the demand. Look, check out the tails on these candles here. See these wicks here, quite long wicks, above and below. The reason we are flat is because the pressure from both directions is equal, right? There's a supply and demand equilibrium, which is why we're crabbing right now. We're going sideways because the bears aren't stronger, the bulls aren't strong enough yet to break that resistance, right? So, and then, you know, coupled with a lot of indecision, a lot of people waiting, you know, for the penny to fall, for the coin to drop, for the mic to drop, right? We want to see what this funds rate is going to be. Like that's step number one. I think that's what's going to shake things up. All right, that's enough from me about that. Let's go back to the hourly chart. We're back above 23K, just. We're still squeezing. I think that's going to be the theme for the rest of the day. Like, so the end of this box is the weekend, right? So we've still got Sunday to unwrap. We're 5 minutes into the new day, so we're in Sunday now, according to UTC, right? Universal Clock. Now Saturday, how did our Saturday perform? Let's hide the drawings again and just go to the daily chart. And it was a big fat doji. Nothing happened. There's our Saturday candle. Pretty flat, as much like our Thursday candle. Friday was cool. There was a bit of up and down there. The range was a bit taller than the Thursday. Wednesday was awesome. Really nice push up. Nice range. But look, Saturday, Sunday, Monday, Tuesday are generally pretty boring. Pretty flat, low volatility, tight range. I think your Wednesday, Thursday, Friday are what pick up the market. That's what gets things really moving. You know, obviously Wednesday last week was great. Thursday was a preparation day for the action we saw on Friday. But yeah, like especially last week, like Wednesday, Thursday, Friday, those three there. Where's the Wednesday, Thursday, Friday here? Wednesday, Thursday, Friday. We had an awesome Saturday for once, 2 weekends ago. You know, we haven't seen that in a while. But yeah. Now, I want to show you something really cool. Now that I have TradingView Pro, I can do some bar replaying. Now, I wanted to do it with the EMA cross. And I want to go use it on the daily chart, and I want to take us back to as early as possible and just see how price behaves above and below the 200 simple moving average, which is the yellow line here. So if we hit replay, and let's wind the clock back to 2017, right? So here we are, 2017. I've got it on 10 times speed, so it's going to play a day per candle. So we're on the daily chart. Let's see what happens. So we hit play. We haven't got our 200 daily moving average yet because we don't have the candles for it. You'll see it kick in soon. I'll zoom out a little bit to give a bit more context of price. But once we get 200 candles, you'll see the yellow line start to form, which is the 200 daily. There it is. All right, price dips below the 200. Now the bear market of 2018, we saw a lot of dancing around the 200. We lost it completely. We had that death cross there. You know, for the most part, we just could not crack above and trend above the 200 for some time. 2018, pretty negative. We saw a drop from 6K down to 3K, which was just there, see? Huge drop. The 200 daily, we're still well below it, right? But look, something changes. We're starting to recover. That 200 daily gets smashed. We're above it. We're riding the EMAs. We go all the way up to, now I believe it's 14K, the peak here. There it is. There's the peak, 14K. Then we start the trend back down again. Lower highs, lower highs, lower highs, until breaking point. We get back below the 200. But we're fighting the bulls and bears. It's still kind of indecisive, but we're getting that chop. Now, COVID's coming up. March 2020. Watch the COVID crash. There it is. There's the COVID crash. But the spring out, this is when quantitative easing started. People were getting stimulus money. People staying home from work, getting laid off, whatever. Lots of economic activity, lots of public money floating around. Everyone's got cash, right? Causes a huge bull market in the stock market and in crypto. We ride that up. This goes up, 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 up. We're riding these EMAs beautifully. Lots of optimism, lots of euphoria. We have our corrections on the way, but for the most part, the trend is your friend. Bull market. Okay, bear market. We cracked below the 200 daily. To me, that signals a bear market, right? But then we start cracking above it again, out of the blue. What the hell? Everything, we just start rallying up and we get to 69K at the peak. Mind you, the RSI is bearishdivergence.com. It's extreme bearish divergence. All right, then we crack below. We really get below the 200 here. This is, the end of last year, or the end of 2021, heading into 2022. Russia invades Ukraine through there. Okay, there's Luna, there's Celsius. FTX is coming up in November. You'll see it. FTX debacle. Here we go. There it is. There's the FTX crash. Not that dramatic. And here we are today coming up. Huge rally. Back above the 200. See that? Bang. Look where we've been. Look where we're going. Get some perspective on what's happening in the market, in crypto, right? Now, obviously price can break above the 200 daily moving average and then pull back to test it, just like we had back here, right? Look at this. We cracked above the 200 for the first time in a while. Got up above it, new paradigm, everyone's bullish, but then pullback happens. Pullback happens. What Fibonacci level do you think we hit for the pullback? Why did we find support where we did? Was there a fib level? And I reckon there probably was. Let's have a look. Let's do a fib retracement. So there's the starting point. There's our ending point for that run. Fib retraced to the 0.382 fib level for support. There's moments where my internet dips, but then it comes back. So bear with me if that happens. Sorry about that. Let me know if you can hear me in the chat there. I'll just wait for you guys to respond. Just say yes, or we can hear you, whatever. It might take a second. It's probably buffering. Yep, okay, awesome. Thanks, dude. Alrighty. So yeah, where were we? We were talking about the dip and the rip, and where the hell did we find support after getting back above the 200, back over here? Yes, okay, here we are. So we found support at the 382 fib level. Awesome. We had daily closes equaling each other just here. See that? That's called a tweezer bottom. It kind of indicates a pivot, right? When you get them matching up like that. A bullish engulfing candle. That's another signal that things are looking good. Here's another bullish engulfing. See how the green candle's taller than the previous day of red? That is a nice chart. That's a signal, right? And on the daily, you know that daily signals are going to be quite strong compared to, say, 1 minute chart signals. So, yeah, optimistic, found support at the 382, continued to rally higher. Now, there is a bigger measure at play here. Now, we come up and make a high. you can keep that low there, the starting point, right? But you want to take the measure now up to this high. And you want to see, okay, if we're going to pull back, where are we going to find support? And this time it was at the 50. A 0.5 fib retracement found support. Now this was cool to see. We saw a low here, and then we saw evidence of a higher low right here. Now check the bullish candles. We had 3 green candles in a row. The third candle being really strong and getting us up above this high. So we changed the character because we were getting lower highs, lower high, lower high, lower high. But then bang, we broke that. We changed trend back to an uptrend. So this was just your ABC correction, you know, your A, your B, your C, pullback off an Elliott wave structure, right? Mind you, like this Elliott wave was interesting. It was like it was a really big A, or there was a really big wave 1. So there's your 1. There's your wave 2, first pullback. Wave 3, second impulse. Wave 4, correction. And then the 5th wave, just a little bit higher than that wave 3 peak. So that's Elliott wave theory in a nutshell. Now, with Elliott wave, you subdivide. So you can find a 5-wave structure within wave 1. 1, 2, 3, 4, 5. Now, there's something called an ABC correction with Elliott wave. So like after you finish your 5 wave, you get an ABC, which is something like this, like your A, your B, and then your C, wherever you want to call that, like probably there, right? Below. And then look, off to another 5-wave structure. However you want to count it out, like these are called subwaves. So if you want to call that the 1, 2, I don't know, it's quite small compared to the 3rd wave. I don't know where you would take it to. I'm not totally proficient with Elliott wave theory. Maybe there, and then to this wick for the pullback, and then there's wave 5. And then you get another ABC correction right here. So you got A, B, C correction. And then you get supposedly another 5-wave. But this was a strange wave. This 5th wave was kind of, it didn't have a lot of juice behind it. But 1, 2. This is actually illegal. Like this disqualifies a 5-wave structure if your wave 4 comes below the high of wave 1. That basically discredits that as a 5-wave count. So yeah, that final leg there, hard to sort of kind of depict where the 5-wave count is. Maybe it wasn't a 5-wave, but anyway, that's Elliott wave theory. It works for some people, and then other people find it frustrating, like me. I can't make it work, but if it works for you, that's awesome. Good stuff. But yeah, where were we? We were talking about the 200. Okay. Let's delete these fib levels. I'm going to turn off some of these other things just so that we can focus in on just the price. I'll turn my position off as well. Okay. So yeah, there was our impulsive move out of the low, like down at the low of the prices here. We know that the first one was a 382 support. The second support of the larger move was a 0.5 fib level, level of support, and then we got the next impulsive wave up. Now we want to read. There was obviously a failure of a support, of a bunch of supports of the bigger move, right? So if we measure, like say, let's just pick this wick here because it's the most extreme to the most extreme point on the high side. You can see each fib level failed to support. Like initially there was a bounce at the 382 here, but it failed. And then, you know, we tried, there's a lot of action, a lot of activity around the 0.5 fib, but eventually it failed. And then, you know, we broke below the 618 fib level. So that's kind of telling you, wow, there is no support. You know, we're just crashing here. And then till finally we get some 786 relief. You know, yes, we wicked through it. There was activity below it, but for the most part, you can see that the price tried to maintain support above the 786, but it just wasn't enough. Like, you know, that 200 EMA indicating that, you know, price was exhausted. It really needed to correct and come down, and that's what we got. So we got a huge correction. So yeah, taking a fib reading of the entire move here from top to bottom. Remember, I was saying at the start of this stream that we haven't even come up to the 26, sorry, the 236. Let me just eyeball this. So from there to there, yeah, the 236, we have not even come up to test that yet. So that to me tells me that there is still some movement to come. I feel some more up movement to come. If we pull back, so be it. Like if we come to back test the 200 EMA here, well, let's say this EMA is like doing this now, price coming back to back test it. Let's say it finds support somewhere like at 21,500-ish. And then we rally into the CPI. Because, you know, maybe the funds rate causes us to pull back. And then CPI causes a lift. Or, you know, the anticipation of CPI, like buy the rumor, sell the news, right? So that could get us our next leg up. Anyway, can you see what we're sort of like on the cusp of right here? And that is a golden cross. So if I bring up a different layout here with the EMAs, I'm going to turn off the 200 EMA. We'll leave the 200 SMA on, which is the yellow line. And I'm going to turn off the 50 SMA and leave the 50 EMA on. So the EMA is the fast one in orange, and then the simple moving average is the slow one in yellow. So the 50 EMA with the 200 SMA. This is how people read golden crosses and death crosses on the daily time frame for Bitcoin or for any chart. And can you see what we're basically on the cusp of doing? Look at this golden cross. Look at that. Would you look at that? We just golden cross, guys. Like as of today. It's just begun. Golden cross right there. Now, the weekly chart paints a different picture. I'll show you this. This is scary. This is very scary on the weekly. But look at that death cross threatening Bitcoin right now. Death cross. It hasn't happened yet, but it's close. It's very close. Can we avoid disaster of a weekly death cross? By the way, Bitcoin has never. Let me check. Let's go have a look. Has Bitcoin ever death crossed on the weekly chart in all of history? Let me hide some of this business. And I'm going to get rid of these lines. So this is the index for Bitcoin. Now I think recently TradingView put up some more data, more candles of the history of Bitcoin. I think it goes all the way back to the birth of Bitcoin. They've somehow found data to support, you know, where Bitcoin started in price, and it's all the way back here. Very cool. So this is when we were less than a cent. Look, Bitcoin's price. It doesn't even come up as a reading. I have to go logarithmic because you just can't see it back this far. Or there you go. So you can see. All right, let's go. Let's turn on logarithmic and look. We're on the weekly. Have we ever death crossed on the weekly chart with the 50 EMA and the 200 SMA? Has it ever happened? I don't think so. because we didn't really start getting the 200 week until here, because this is 200 bars of information. There's the first 200 days of Bitcoin. It happened the 23rd of September 2013, 200 days in. All right. Do we ever death cross? Do we ever do it? Ooh, it came close there. See that? Very close. Let's do this on bar replay. That would be cool. So let's pick here. There's the birth of Bitcoin. Little baby. There's the birth of Bitcoin. I'll zoom in a little bit. It was very volatile when it first came out. This is when it was a shit, you know, this is like less than a cent. It, you know, imagine buying it back here. Amazing. But yeah, it's building. Oh, some people start hearing about it. Like, you know, at 6 cents, very few people would have known about Bitcoin back here. Even in 2010, you know, when it was, this is when some enthusiasts in cryptography would start, you know, ooh, have you heard about that thing Bitcoin? Like, ooh, magic internet money, cool. Getting involved. Bitcoin hits $1. Awesome. But look, we're still building. It starts going viral in, I think, 2013, maybe earlier, maybe 2012, but we're still in 2011 back here. I'll take it off logarithmic. Let's see if that changes the game. Yeah, that's a bit better. You can see what's happening. So yeah, huge crash in 2011, bear market of 2011, right? 2012, the year that the world was supposed to end in December, remember? The Mayan calendar bullshit. I remember that stuff. If only I knew about Bitcoin back then. I couldn't tell you. I mean, it's pretty hard to know what day was the first day you ever heard the word Bitcoin uttered. Not only that, like, but did you even give a shit? Like, did you care about what Bitcoin was? This is when we started really changing the paradigm. Like, Bitcoin, 2013, look at that rally that went up to $265. Crazy. Followed by, you know, huge volatility, massive dump. Like, wow, this thing's crazy. Wow, look at that. Look at that pump to $1,000, $1,200 basically in 2013, the end of 2013 there. Very bullish. Now look, we've got our 200 weekly simple moving average and our 50 weekly exponential moving average. So that's why it's a bit tighter to the price. You can see it follows the price a bit tighter as it's a shorter average. But yeah, the 2014 bear market, fairly painful, right? Like, you know, lots of pain there, lots of downturn. It would have been very painful to have bought Bitcoin up around $1,200 and see it ride all the way down to $200. Huge, you know, people selling in fear. You know, there was a lot of articles saying Bitcoin was a scam. It was like a, you know, Bitcoin's like a waste of money. Like, it's never going to succeed. That kind of shit, you know. It was only the true believers in Bitcoin that would have held and bought this dip, right? Institutions don't even know what Bitcoin is back here. This is unknown. It hasn't even been viral yet. Okay, this is where things get interesting. 2016. This is the big multi-year bull run that just has sort of begun, right? Here we go. We're climbing. This is when the general public start to cotton on to Bitcoin, right? This is where things really start heating up. You know, you got the big explosion in Bitcoin mining of, you know, like, it becomes like popular to do, right? And then, so that's 2016, an amazing year, you know, awesome growth. There's 2016. 2017, very volatile to begin with. Very, you know, are we gonna get? Ooh, it's getting explosive now. Like, people are really getting into crypto here. We're only at $2,000. Remember, Bitcoin gets to 20K by the end of the year in 2017. So it was a big year. This is where the bulk of the growth happened. This was probably arguably the best bull run that Bitcoin ever had, or one of them, from 2016 to 2017. And then we had our bear market, the crash in 2018. This is when I got involved in crypto. At the peak, at the wrong time. But anyway, I got involved anyway, tried to learn how to trade in a very violent bear market. All I could do was go long, so obviously I got wrecked. Got frustrated, saw that Bitcoin, oh yeah, Bitcoin's dead, it's party's over, right? That's the kind of mindset you get into in a bear market when it's your first year. When you're a complete newbie, like a lot of you guys are, like, right? You guys are probably pretty new to Bitcoin and crypto. Yeah, huge crash, you lose faith, you lose, you know, you capitulate. That's exactly what they want you to do, right? But hey, look, here's the second coming. Look, we're rallying up to 14K. This is when I got back involved back late. I came back in late to the party, just like a noob does, you know? I turned my back on the market through here, didn't take advantage of the opportunity through here, and I came back in late and traded the crumbs of this bull run. It wasn't a bull, like, yeah, technically it was a bull market, I guess you could say, but it, you know, it was just a lower high in the bigger picture, right? A lower high to our 20K all-time high. All right, where are I? Okay, COVID happened, bang, dip. Look, the weekly EMA is still healthily above the 200 SMA. See, we have not had a death cross on the weekly chart. Even COVID couldn't make us death cross on Bitcoin on the weekly, right? And then, you know, here's new paradigm, new euphoria. You know, oh, I can't believe we cracked 20K. You know, we're up over 40K now. Like we're looking at 60. You know, and then we get Wyckoff distribution start to happen. That was through there, right? That section there. And then, you know, we crash down, and this is where I'm calling a bear market when we hit. But then, look, we get a second coming. We get a double top market. So, you know, 65, 69K up here is the peak, right? 69K. That's our current all-time high. But then, you know, global economy's looking terrible. All countries are suffering the fallout of COVID. You know, interest rates, inflation's out of control. Interest rates have to go up to try and combat that inflation. We crash, we crash, we crash. Where are we? We're coming up on 2023 yet? We're getting there. FTX happens there. There's the FTX candle. And crab market went up. Bang! This is us recently. Right there. How close are we to disaster of a weekly death cross? If we get a weekly death cross, could it just kiss? Could it just be a kiss, you know? Kiss the bottom and then launch, you know? That could happen. Remember how dangerously close they got back here. Just there, look, that got scary too. That got pretty scary on the weekly. All right, that's cool. Let's check out the daily. Let's go have a look at the daily. There's death crosses and golden crosses all over the place on the daily chart. Let me go logarithmic as well. All right, this is back to the dawning of Bitcoin. I'll just scroll. I won't replay it, but look, this is all bullish. Death cross, bang, bear market. Golden cross here, but we were chopping. Golden cross, awesome result of that golden cross. Wow, this thing lasts for ages. There's the death cross. There's another brief golden cross followed by a very very soon death cross. So you can see an example of golden crosses don't always last forever. I think it depends on the context of where price was and how it was behaving before the case. But anyway, death cross, bear market, bear market. This is 2015. You know, golden, death, golden. See how fast that, like how many we got in a row there, and like how soon they came in. So remember, we've only just golden crossed as of today on the daily time frame. But look, if we do one of these kind of golden crosses where it's like we golden cross, but look, if we zoom into that, look, this is 2015 still, but after the golden cross, we did come out of like 4 days of stagnation, and then we took off. And that, look, there was even a pullback little cluster there too, where it felt like, oh, that's probably it. That's probably done. You know, we're probably over now. Like, but then look, bang, support, support, higher prices, higher prices. So this one lasted a while. This golden cross picked us up. We did not death cross again until all the way up in 2017. I think 2018 still had us above, but you know, obviously things started to change, and then we got a death cross here, and that saw us you know, retrace heavy until the next golden cross of 2019 back over here. Happened in April of 2019, a huge golden cross. And this was the bear market relief rally. This was a small bull market, if you ask me. That's bull market conditions, right? Getting above the 50 SMA. I mean, the 200 SMA. Golden cross into death cross. Here's a death cross. Here's a golden. Here's a death. Golden. This golden took us all the way up until the death over here. And then this one was very teasing to begin with. It teased us right there. Nut, bang. And then finally, a few days later, we get the golden cross again. But it didn't live long. It was like the last final moments of the bull market. You know, getting us to 69K. Now there was RSI warning signs for that secondary move up to 69K. We were hugely bearish divergent on these peaks, so that was kind of your signal to be to say that this bull market has come to an end. Death cross. The death cross has been respected since January of last year. You know, this is our bear market. That all of this death cross. The result of that death cross. Dead, 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 dead. And look, today is the first day that we've golden crossed. And hey, lo and behold, while I've been talking to you guys, check it out. Let's go to the other list here. Let's go to the Bitcoin tether, and I'm gonna turn my I'm gonna turn down to the 1 hour time frame and turn my drawings back on, because we have ourselves some activity, guys, outside of the weekend. Are we gonna make a new high for the weekend? Possibly. Look at this, it's happening right before us, before our eyes. Are we coming to test the top of the triangle, you know? Was this helpful, Daniel? Appreciate that comment, man. Everybody needs to hit the like. All this info was amazing. Yeah, you're welcome, man. You're welcome. And I appreciate the support, guys. Smash the like button if you like what I've been banging on about in the last hour. How long has this stream gone on for? 1 hour and 10 minutes. I'm not lost for words, am I? There's lots to talk about. Sounds like I'm tooting my own horn. I'm not, I promise. I'm trying to stay modest. Yeah, look, it's cool. This is great to see a bit of action off this this magnetic $23,000. You know, 23K is a magnet, and I would not be surprised if we return to the magnet like very, very shortly. Okay, there's a magnet on 23K. Let's magnetize this side as well, because it seems to be magnetizing that price to that $23,000. Are we going to get a breakout, guys? Are we going to get the unthinkable? You know, a new high on a Sunday? Like, can it happen? We got front row seats to it right now. What time is it in the States right now? 6:39 p.m. Nice, comfortable time. You're not tired yet. That's good. You've just had your dinner, or you're about to go make dinner. In Australia here, Southern Hemisphere, it's 10:40 a.m. So it's a nice, comfortable morning. You know, you could have even slept in on this Sunday morning with your big old hangover. However, in the UK, it's midnight. And you guys are probably feeling a little sleepy, I don't doubt. But maybe this is waking you up. Maybe this candle here is optimism. Sunday optimism, right? 7:40 p.m. here in USA. So in New York right now, is it 6:40 p.m. in New York? Eastern? What is the current time Eastern? I'm gonna look it up. New York current time. 7:41 p.m. Okay, cool. Let me go UTC. I see, so it's -5 at the moment in New York. So that's standard time, right? You're not in daylight savings right now. It's actually 7:41 p.m. Yeah. So, you know how in New York they say EST for Eastern Standard Time? What is it when it's daylight savings time? Is it ESDT? Eastern Standard Daylight Time? Is that how they say it? Eastern Standard Daylight Savings Time? I'm going to Google, when does daylight savings start in New York in 2023? I think it's coming up soon, right? 12th of March, okay. There you go. Sunday the 12th of March is when daylight savings time starts, and then it ends on the 5th of November. Okay. Anyway, that's that out of the way. So you guys, what, you put your clocks forward an hour for daylight savings time? Silly question, what's with the magnets? The magnets is $23,000 because price has been coming back to it like a magnet. That's pretty much why I've got the magnets at that level. So we're deviating away from that magnetic zone, you know. Spring forward, pull. Spring forward, fall back. Okay, gotcha. Yeah. Gotcha. Guys, we've got 36 people in the stream today. Welcome, guys. Now, currently, YouTube's telling me that it's not receiving enough video to maintain smooth streaming, so I do apologize if there's a bit of a lull in the stream there. Okay, these are like record numbers here for viewers, guys. 34, very nice. Liking it. Yeah, the time lapse. All right, sorry. Was that buffering right then? Yeah, it's back. Connection's back. We've got 28 people in the room. How you doing? Probably a classroom of people. You know what's fun to do? This is just me, but if I want to know like how many people are watching, I just type it in to Google Images. I just type 30 people, and how big is 30 people? It's about this many people, right? Now, when we start getting like 200 people, I think 200, 250 was like what I was averaging in the bull market for my streams. So that's like that. That was my audience. There's 200 plus people there. 1,000. What does 1,000 people look like? 1,000. Whoa. Okay. That's about 1,000 people right there. That's a pretty decent crowd right there. That's like a small concert right there. I think some crypto streams pull in like 3,000 people, like, which is pretty cool. Wow, look at all the brides and grooms. 3,000 people in a mass marriage ceremony. I have 7,000 subscribers. Let's see what 7,000 people looks like. Whoa. That's amazing. 7,000. That's a lot of people. Cool. Inauguration of Barack Obama, I think, was like 1 million people at least. Yeah, look, this is 1 million people. That's insane. Wow. Yeah, big concerts, big stadium concerts, like 80,000, 100,000 people, you know. But yeah, it gets crazy, like numbers. Wow, look at that. That's people. 1 million people. Madrid. I don't know if that's people or not. Probably is, but yeah. Anyway, I'm getting sidetracked. Exactly, Siboku. 7,000 decentralized. Yeah, exactly. They're not decentralized. They're spread out and they don't tune in all the time. A lot of people that subscribed in the bull market last year probably aren't even thinking about crypto right now. You know what I mean? They're the normies. They're the people that don't pay attention until it's too late. And they're going to be coming back to buy our bags, to buy our positions, right? That's how it works. That's how markets work, guys. It's a free and open market. You know, you don't have to participate if you don't want to. It's the same with the stock market. You don't have to get involved with the stock market if you don't want to. But those that do, you basically come in and accept the risk of losing money when you participate in a market. And it's the same with crypto. You know, if you're buying into something, there's no guarantee that you're going to make money on it. So that's fair play. I don't think markets are a Ponzi. Like, I don't think that it's a scam. I think it's completely a fair system. It's a fair game, right? It's capitalism. It's a dog-eat-dog world that we live in. You know, it's legal. It's not illegal to participate in markets. So I don't know. There's a lot of FUD. There's a lot of like negative sentiment around crypto and trading crypto. Like, a lot of people frown on it. But look, you know, I think they're just bitter because they don't make money. They're bitter because they missed out, you know? If you've got a problem with crypto, you've got a problem with Wall Street. And if you've got a problem with Wall Street, you've got a problem with capitalism. And if you've got a problem with capitalism, you've got a problem with America and every other major country that is a capitalist country, right? You know, capitalism is why we are where we are with, you know, technology, development, population, industry, everything that's good in our society is a result of capitalism, right? You know, you put the effort in, you get the results. You know, for the most part, with that, that's how, you know, that's how you get results. You put effort in, you put the work in, you get the result. I think that's fair. I don't think it's, you know, what's the alternative to capitalism? Like sitting around and getting handouts by, you know, the central figure that controls the wealth. That sounds like communism, right? That's like, yeah, one central body that holds the wealth and trickles out even amounts to everybody, even distribution. You know, that how does that incentivize people to work and to like develop and get and create new product and new and advancement in our understanding and technologies? I think money is a nice, it's a good system to you know, to incentivize work, right? The harder you work, the more you get rewarded, generally speaking, right? But look, it's the system we have. I don't think there's a better system out there. I love capitalism. I'm an advocate for it. I think it's, you know, if you've got a good idea for a product, sell the product, you know, reap the profits that are to be made from that good product or that good idea. You deserve the reward that's coming your way if it's popular, you know. Markets aren't a product. It's a totally different, it's this totally different like paradigm, this totally different environment, isn't it? It's not like a product and service thing. It's trading. Like you're trading your, like what you have. You work hard to get the money that you use in the market, don't you? You go out and you earn the money to bring to the market. That's your capital. Now, if you trade that capital up to make profit, that's, you know, that's your reward for taking the risk, you know? You took the risk of your hard-earned dollars to take a position, whether that's short or long, it doesn't matter. But you took the risk. You're bringing your hard-earned money into these markets and you're taking the risk. If you get these trades right, you deserve the reward of the profit, right? If you bring money in and lose that money, I see that as a lesson, you know? You didn't do it right, you know? It's an expensive lesson sometimes. People bring in too much money as a beginner, and they need to reassess their risk and you know what kind of money they're playing with. You know, if they can't afford to lose, you know, $1,000, don't bring $1,000 in because you're gonna lose it as a beginner. You know, especially with leverage. But yeah, like you have to sort of get comfortable losing money as a beginner. Like that's just part of the game. It's like the fee of admission, if you will. So blowing up your account or like losing a shit ton of money at the start is expected. That's the norm. That's what normally happens. It takes experience and dedication, and one of the biggest things, it takes discipline to become profitable. Greed gets punished. You know, if you do greedy things like go high leverage with no stop loss, you're gonna get punished for that. You know, you may get lucky. Getting lucky is actually a bad thing. You know why? Because it trains you to think that you can get away with it repeatedly. Like, oh, I'm lucky. I'm gonna keep doing this. You know, I'm gonna keep going 100x with my entire account with no stop loss. You know, I got lucky. Why can't I get lucky again? You know, your luck is gonna run out at some point if you keep doing stuff like that. If you trade like a cowboy, you're gonna get bucked off the horse. You're gonna get bucked off the bull. But if you're patient and you're disciplined, patience and discipline, and you learn about risk management and how to protect what you do have, you're gonna grow your account and it's gonna be sustainable. If you do make mistakes along the way and you're using proper risk management, you're not gonna blow it all in one bad trade. You know, you're going to lose a little bit of money and you're going to learn what went wrong. You know, why the hell did I lose money on that trade? You know, take it seriously. Say, you know, what am I going to do next? What am I going to not repeat? You know, what action did I do wrong? And then don't do it again. You know, just try to learn from those lessons. Harder, easier said than done, right? This is all easier said than done. It's very hard. Becoming a good trader takes practice. It takes determination and resilience, because you're going to lose money along the way and it's going to hurt and it's going to make you disillusioned as well. You're going to get frustrated, and a lot of people do turn their backs on crypto and trading because, you know, they get frustrated and fed up with the losses and just, it's too hard kind of thing. So yeah, just got to find a way to get comfortable and not expect to become a millionaire overnight. It's not going to happen. You know, not saying it can't happen. People can get lucky, but you know, you got to keep your expectations in check with reality, right? What's likely. You play with what's likely, not what might, or like not the chance, not the 1% chance that you might get crazy returns off going 100x with everything you've got. You know, you may as well go to the casino if that's the case. All right, a couple of people saying check out Litecoin, check Litecoin. Okay, I'll check Litecoin. Let's have a look. What do you got for me, Litecoin? LTC up 5.5%. Beautiful. Look at that rally. Let's go to the 1 minute chart and see that on replay, huh? You hit bar replay. Let's go from here. 10x speed. This was Litecoin. Pretty stock standard, you know, yeah, trading around the EMAs here. And then, all of a sudden, we get some action. Wow, okay, we're trending. We're trending. That's where we are right now. Beautiful. Don't FOMO, guys. Don't FOMO. Be careful. If you were in somewhere down here, congratulations, awesome move. But when that happens, it's dangerous to expect that it's going to happen again, or it's going to continue to happen, right? There's going to be a point where the light gets switched off. So you just have to be careful, all right? Now, when price goes up, this is a great example. When price comes up like this, and you're taking position here, like let's say you FOMO in right this second, look how much risk there is that you've just taken on. You've taken on all of that risk. When you get in when things are flat, how much risk are you taking? This much risk, see? Big difference. Small risk, bright potential, you know? If things don't work out and you took a position here, let's say price started to move down, okay, you stop out. That's okay. So that doesn't mean you can't enter positions in a risky setup, right? It just means you have to really tighten up your stop loss. Like let's say you get in here, you want to have your stop relatively tight, you know? Because you don't want to be in here when this crashes. Like if this pulls back, it's going to be fast and it's going to be probably not nice. So tighten up that stop, lower your expectations. Don't do it on a candle like this. If we get a bullish engulfing, I'll show you a FOMO, like a safe way to FOMO into something if it goes engulfing, right? This is the 1 minute chart. And there's a chance you stop out, but you want a bullish engulfing candle, you know? That's what you want to see. Like this, see how there was a bullish engulfing here? Take your position at the bullish engulfing candle and set your stop at the prior candle, the previous candle's low, just below it. That's how you would do it. And then you would target, you know, say 1-to-1 is probably enough. Oh, sorry, wait. A 1-to-1's back down here. There's a 1-to-1. That's being safe, right? 1-to-1 risk to reward ratio. There's a 2-to-1. But yeah, you can just follow the trend and take profit how you like. But look, you don't want to get in when it's pulling back like this, right? It's possible for some to short also. It is possible, but look how strong the trend is. You want to be careful expecting it to crash out of the blue. Here we go. Look, candle, bullish engulfing. Is it going to stay solid like this? We wait. This candle has to close high for us to feel confident that there's going to be a continuation. Let's get a position ready, like a FOMO. This is just an example. The stop, we know the stops are already going to be here. Wow, what a candle. What a push up. This is probably going to make a new high. Is it going to give us an opportunity to get in? It's got 10 seconds left. We know our stop loss lives here already because we don't want to be in it if it gets lower than that. And we're just figuring out where our entry is going to be. It's going to be on the close of this candle. All right, let's say we got in there. Bang. We know that we risk this much to lose, right? Let's bring this over here. We know what we stand to lose, but we're aiming for a new high. That's how I would play these kind of runs. So, you know, just keep your expectations in check. Like, you're not always going to get a higher high. Like, you know, there's going to be a point where this loses momentum, and that's where your stop loss protects your ass. Stop loss is there to protect you from picking the top. You know, I'm pretty good at picking the top sometimes when I go long. But yeah, like, it's the stop loss is what matters. This is the most important thing when you're trading like this. But look, bullish engulfing, awesome. That's a good sign. Bullish engulfing candle. The second candle has been good too. Look, it's another bullish candle. This is where I would tighten up my stop loss because we've had some movement above. We're in profit. So let's tighten up that stop to just below the wick of our prior candle, our entry candle. And look, if you're scared, take profit here. That would be the play, right? You know, you're in profit, take it, you know? Or if you feel like if you're happy to accept a stop out, let it run. Let this play out. You know, if we get above the current resistance we're dealing with on Litecoin is this, and we need to get above that, right? So for a chance to get that, you got to prepare. You got to be prepared that you may stop out. Okay, that's the risk that you put down for the potential reward that you're about to get on Litecoin. Okay. We're in the ballpark, we're in the neighborhood of this high. Guys, I'm going to put up a little warning here. This is just hypothetical, right? Trade at your own risk. This is not advice. This is just showing an example of what a FOMO looks like when you FOMO into something like this. And this is how I would play it with a tight stop loss. And you got to, you know, it's okay to take profit. When you're in profit on something dangerous like this, it's okay, you know. Okay to take some profit. But anyway, let's see how it plays out. It'd be nice to see it continue up, but we'll see. There's going to be a point where this gets exhausted and does retrace. So you want to like rein your expectations in. This could turn out to be really good, you know? It really could. It could turn out to be amazing. We just have to wait to see. Trading is not knowing the outcome. See what I mean? I don't know the outcome just as much as you don't know the outcome. We don't know the outcome. Trading is the strategy that you employ. That is trading. Trading's the strategy of getting into something and protecting yourself. That's trading. Trading is not being Nostradamus. It's not about knowing the future. It's about taking a position and seeing the setup, like the potential. We know, okay, what's the potential here? We know that the trend is really strong, right? Strong uptrend. Pullbacks have been short. Pullbacks have been shallow. That's optimistic. We're above the EMAs. We're very elevated. So there's a strong trend here. So we've got that. We're riding on that, okay? But we don't know. We don't know where the top is. We just don't. It's a fool's game. Predicting tops and bottoms is for the fools. Let the fools predict, okay? Let the traders strategize around the price. If you want to be a good trader, you strategize. You do not predict. You do not make any assumptions. Assumptions will get you wrecked. Believe me. Okay. Still playing out. It seems to have like stalled a bit. By no means is it crashing. It's just consolidating. This is kind of, in a big picture, this is what Bitcoin's doing right now on the daily time frame or the hourly, right? We've come up and now we're stalling because we don't. There's a lot of indecision here. The bulls and bears are fighting it out here. The bears are, you know, they're setting up because they see a potential pullback, like a nice pullback to catch. And look, we're about to get punished for our FOMO. Like, look at this. Look, here's the punishment for getting in late. Are we going to get punished? Here's the punishment. Is it going to happen? Oh, not yet. Still alive. Still alive. Respect your stop loss. Do not move it. Respect your stop loss. Respect that stop. If it stops out, you did the right thing. Okay? If you move your stop loss down, you did the wrong thing. That is frowned upon. Do not move your stop loss. If it comes back up, you got lucky and the trade, you know, stayed alive. BTC pushing again. Excellent. Excellent. I can see it up here, 23,200. That's good. We're $200 above that magnet. Okay, that's a hammer. Now we're bullish engulfing that hammer so far. This is interesting. This is interesting. We almost stopped out. See why you set your stop a little bit below the wick? Because you want to prevent these liquidity or these stop hunts. That's the point. You want it tight still because you don't want to lose money. You don't want to lose much money when you do stop out, but you don't want to choke the trade as well. Like, you want to give it a chance. But by all means, please don't broaden your stop loss, because there's a good chance the stop will hit anyway and you're going to lose more money than you could have had. It's better to reassess and find the next opportunity, you know, by losing that little bit of money. Hunt out the next good opportunity and take the lesson. What was the lesson here? We FOMO'd. We FOMO'd into a really dramatic trend up. That's reality. But look, we're still alive for now. We're still alive. I'd say there's a fair bit of resistance here because it's right on 95. Right on $95, right? Is Litecoin $95? Is that true? Okay. It's been so long since I've looked at Litecoin. But yeah, $95. There you go. All right, so we're still okay. We're still looking okay. Can you see the evidence here that this is still alive? It's the low and then this higher low. That's the evidence that we've got here. There's a trend. There's a very micro trend going on. Let's draw that out. There's our micro trend. Now, just because we have a trend doesn't mean the trend can't break. It's just we're trying to identify, you know, the breaking point, like the point where it's not looking so great, right? So that's our little line of optimism right there. That's our hopium. If we break the yellow line, that is a breakout. It's breaking resistance, right? Because that's our current resistance. Let's broaden this out a bit so we can follow it. There we go. We're back up into profit. Good, good. We weren't punished for the FOMO just yet. If you're doubtful or if you're scared, if you don't think it's going to break out, take the profit, you know? That's what I would say. But if you want to give it a chance and you're happy to stop out, if you're happy to take the small loss for the opportunity and the chance that it may break out, then by all means stay in. You know, don't adjust anything. Just let it play. These are the different ways to approach, you know, an active position when you're in it. And this applies to all time frames, guys. All time frames. Are we going to get the pop above 95.09? It looks like it's knocking on the door. It's in the neighborhood. Not there yet. There's a lot of resistance. A lot of people doubting it. The demand is dwindling, maybe. You know what I find happens a lot? This. Okay, let's pretend this is price. This is what happens a lot. Bang, and then breakout. That happens a hell of a lot. You get the fake out and then the breakout. So, but I don't know. In this case, it might just be healthy enough to where it stays active. We'll see. Are we going to get another launch here? Is it going to happen? Bitcoin's still looking good, 23.2, $23,200 Bitcoin. See how we're sort of like plateauing here? We're sort of stalling. This is where you start to think, shit, should I be looking for a short? You know, like, should I be looking for a little brief short here, like coming up? If we break the trends, if we get lower, if we break market structure. You know, these are the kind of environments where the bears come out and go, ooh, this looks good. You know, we've just had an explosive move up and it looks like it wants to correct. For argument's sake, this FOMO that we got into, we may have taken profit on it already if you were playing it safe, right? I mean, playing it safe, look, that would have still been a 2-to-1 risk to reward, that little scalp. That is a scalp, right? But yeah, look, bears, look, we've just broken down through that trend that I was talking about. But yeah, this is microstructure. This is very short time frame. You know, micro scalping, which it's very popular with noobs like me. I like to trade the 1 minute. But yeah, there's more money to be made, guys, on like the hour time frame or the 4-hour chart. More money, believe me. Take your signals from higher time frames. You're going to get bigger trades, like bigger swings. You have to be patient. Yes, this is the chart for the impatient, the 1 minute chart, because you get in, you get your signal, you get your result, bang, you're out. Very impatient way to trade. Very volatile too. Like the 1 minute time frame, geez, it goes everywhere. But you know, you can get lucky. You can catch trends. Man, this stream's been full of pep talks. I do apologize. A lot of pep talks in here. A lot of free advice, unsolicited advice. Not financial advice, guys. Not financial advice. Words of encouragement. Oh. Could that have been the little mini fake out, that mini dip that broke that trend? Maybe. We're on the 1 minute chart, guys. Anything happens. Anything can happen on the 1 minute. Do you guys appreciate these little examples, these little live trades of how to scalp, that kind of thing? Bit of strategy? Let me know. Let me know in the chat if you like this kind of viewing. This commentary on the 1 minute. Because you can apply this to the hour chart if you really want to. You know, if you can see the setup, if you can see some bullish engulfing, yeah, this is how it works, dude. This is how trading is. Trading is a fractal, like charts are a fractal environment. The 1 minute chart speaks the same language as the 1 hour chart. It's just a different time frame. You have to have different expectations, but for the most part, like, you get bullish engulfing candles on the 1 minute, just like you do on the 1 hour or the 1 day, you know? Same rules apply. You know, respect your trend lines, respect your support resistances. And that's how you do it. Yeah, I think there's a lot of merit to showing a live example, because I don't know the result. I'm not cherry picking an example on the chart, you know? I see a lot of channels will show something after the fact because it's a perfect example, right? Everyone knows that Bitcoin went up crazy in January of 2023. You know, easy to pick an example with that. Live, oh, there's the break. Look, we just popped it. We just popped that resistance. This is a good way to show in the moment. Like this ain't bullshit. This is a way you can approach trades, you know? Look, we cracked that resistance. That's good. It could be a swing failure. You know what a swing failure is? It's where they get people optimistic to trap the bulls. Like, you know how many people take positions when resistance gets broken? Lots of people. Lots of noobs will take a fresh long position at break of resistance. I'm not a good breakout trader. I don't like breakout trading. You know, there's a good chance. Look, here's the correction. Here's the pullback off that. Is it gonna hold? We'll see. Yeah, and that's why I've got the warning up here. If it's live trading, people copy it, and you know, that's why I've got the warning there. Copy it at your own risk. Like, just be careful, you know. There's no guarantees of a winning trade on this channel, believe me. No guarantees at all. This trade is profitable though. Like, if you copied this, you'd be in profit right now. But we're just waiting for the actual move to happen, because it hasn't happened yet. We're still in this consolidation area, this zone. Yeah, Bitcoin is going up. I can see it. I can see the numbers. Yeah, look at that. Beautiful. We broke out of our weekend resistance. Excellent. We're breaking out of the triangle even. Very good. Very good. Litecoin. Look, I'll come back to Litecoin. There's a chance it'll stop out, and that's okay because we've got a stop loss, right? But I'm gonna afford it. I'll keep checking back on it. But look, that risk to reward's very ambitious. It's a 7.3 risk to reward. It's huge. I would have taken profit at 2 to 1, which would have been back here. Right there. Would have been out of this already. But look, if you want to give it potential, if you want to see the potential, like, obviously just let it go. You know, it's up to you. It's your decision of how you decide to play it out, right? All right, I'm gonna watch Bitcoin because I'm invested in that. I'm a bit, but look, Litecoin's cool. It helped us show an example of how to scalp how to FOMO into something safely, right? And look, it's probably going to stop out here. But anyway, we saw a lot of profit potential there. I kind of just want it to stop out so that we can just leave this Litecoin chart. It looks like it won't. We'll just leave. We'll come back to it later. All right, let's watch Bitcoin. I'm going to jump on the 1 minute. I'm not going to draw up a FOMO for you guys. It's just, yeah, I'll just leave it. We'll just watch it. Turn off the disclaimer now, the warning. If we go bullish, okay, if we go bullish engulfing, I'll do another FOMO on Bitcoin. Fuck it. Excuse the French. Starting to engulf. Let's punish ourselves by FOMOing right here and setting the stop just below this previous wick. Let's see if we get punished for FOMOing. We probably will. Let's go for a 1-to-1 to begin with. There's a 1-for-1, risk to reward. Silly trade, very silly. I do not advise this, guys. Do not do this. I'm just trying to show you what happens if you FOMO, right? You can get lucky. All right, it's showing strength. I'm gonna adjust this a little. I'm gonna keep tight stop loss though. Let's increase the stop to like here because we know that we're very risky right now, right? But we don't want to choke it out. We want to see potential here for what might happen. Maybe that stop is a little tight. Let's put it to like there. Look, Bitcoin's very unforgiving on the 1 minute chart. It's a lot of the times, like the algorithms will wipe you out. Like if you're playing the 1 minute chart, it can be brutal. Bitcoin's hard to trade sometimes. On the 1 minute, anyway. Are we going to get punished for FOMOing here? Yes, probably. This is a good example of what not to do, I suppose. Not looking good. Looks like it's gonna stop. At this point, some people would panic sell. They FOMO'd in, they go, oh crap, it's coming down, I'm just gonna sell it here, you know? And are we getting our lesson yet? Is it happening? And no, not yet. 7 seconds left on this candle. And that's why we don't FOMO. There's the stop. Silly position. Very silly to do that, guys. Litecoin. Did Litecoin get lucky? Oh yeah, it did. It didn't stop out, guys. That trade's still active. What's the peak here? A 1.2% scalp. How long did that take in minutes to get that level? 20 minutes. Okay, not a bad little scalp trade, right? See how we had our stop loss in a very responsible spot? We had it below the wick that we entered on, and we actually tightened it up. Before it was down here, we tightened it up, and we got lucky, I feel, you know? You can see that the market makers, the manipulators, were trying to shake out people that were taking positions, you know, late. That's what they'll do. They try to wipe out the people that over leverage and FOMO in. Like, that's what happens. They take their money regularly. So yeah, that FOMO on Litecoin worked. The FOMO on Bitcoin didn't work. This is why FOMO, the success rate on FOMO is terrible. Try not to FOMO, guys. Try not to chase price. Don't chase the green candles. Look for the setups. Look at your strategy. You know, use your indicators. The key, okay, what was the key takeaway from those two examples? Type it out. I want to see if anyone can get the key takeaway from the lesson. What I'm trying to explain in that lesson there. What's the point? What was the biggest takeaway there? There's a couple of right answers. There's two right answers that I'm thinking of, but see if you can guess what I'm thinking of as the lessons from that. Yes, it was a lesson on risk. Yep. It was definitely risky. Definitely risky. But I'm thinking of two words. I gotta remember them so I don't forget them when someone guesses it. Perfect. Insight has it. Don't FOMO is takeaway number one. That's a good point. But I feel like a very and probably equally important rule. If you do, tight stop loss. Exactly, stop loss, guys. Stop loss is the biggest lesson with what I was just showing you there. It's the most important thing, because you don't want to be in it if a disaster happens. You know, it's at a very violent part of the price action, and Bollinger Bands are really good at showing you if it's in a violent part or not. Let's turn the bands on, turn everything else off and leave the bands on. There's the bands. Now, what kind of band do you think is a good entry? Do you think it's better to get in when the bands are really wide and expanded like that? No. That is not a good entry. Do not get in on bands that are wide and expanded. Get in on a squeeze, guys. Get in when the bands are really tight. You know? And if it does shake you out initially off your position, like, it's okay to re-enter. Like, it just, you know, reassess, set your stop loss and get in, because you're going to get rewarded from the expansion if you took the right position, right? But yeah, look, getting in on volatility it's gonna wipe you out. Your stop loss is likely to get hit more often than not. So yeah, build a position in consolidation. You know, when things are flat and boring. Remember in the 4-hour chart I was showing you the Bollinger Bands? Let me delete these magnets. Bollinger Bands, let's hide the drawings. But you want to build positions in a squeeze, guys, because you get rewarded when it expands. And that's what we're just about starting, an expansion with Bitcoin here. Let me bring up my trade. Guys, I've learned a lot of lessons myself in the last 6 months. Lesson number one, biggest lesson, stop loss, because I wasn't using a stop loss, which got me into this really bad trade, right? But the good thing about it was, the one good thing about it was that it was low leverage. You know, it's down to 2% leverage here. The value of the trade is, you know, 6.5 grand and some, you know. Margin, I've had to bring $3,300 to the table to keep this trade from, you know, like wiping out, basically. There's my position right there. The green line is where I live. That's my position. I briefly came above it the other day, but I didn't kill it. You know, In hindsight, it would have been smart to take out the position and reassess, but I'm optimistic. I'm still bullish because I know that the overall larger time frame trend is up, and the evidence of support here is very clear to me. Like, we're double bottoming, we're getting higher lows. Like, there's so much evidence here to support that we could see another push up. But this time, you know, if I do get into profit, you know, I'm about 70 bucks down right now, but if I do start getting into profit, that's when I'm going to introduce a stop loss and protect the recovery that I've sat through for the last 6 months. I'll show you where I got in. Silly. I got in back here. So we're on the daily time frame. Let me show you where I got in initially. I FOMO'd and got punished for it in this zone here, up here, somewhere up there. Very stupid. Regretful. Lesson learned though, guys. I took a position with no stop loss and I got punished for it. I got 6 months of learning my lesson. I was lucky that I was able to replenish my margin and push my stop loss, push my liquidation out of danger, basically. Things were looking really good before FTX exploded. So there's the FTX debacle. That's where it kicked off. We were starting to get nice structure coming up. We broke above the Ishimoku cloud. This is what I trade with. This is my trading platform. This is what I look at when I'm taking positions. I want to be very aware of what the clouds are doing, in conjunction with my TradingView setup as well. But yeah, my biggest lesson from last year is set a stop loss and respect the stop loss. It's better to take, you know, at the time I could have taken a $50 loss to get me back in the game and be liquid again, to look for new opportunities, right? But anyway, I rode this position all the way down here. Even through this, I was like holding. And then this recently gave me hope, you know? This has been great to see this recovery. But still, that does not mean that I did the right thing. I still did the very wrong thing. I did not use a stop loss, and I paid the price of wasting 6 months of time. Wasting my time waiting. So guys, stop loss. It not only saves you money, it saves you time. I haven't been able to touch this $3,000 for 6 months because I've been waiting for this, right? How stupid is that? That's very stupid. So it happens to the best of us, you know? I'm not saying I'm the best, I'm just saying it happens to a lot of people, right? If you're new, I'm, hand up, first to admit, I am new. I am a beginner, I'm learning. I'm trying to improve, I'm getting better, I feel. I'm learning a lot, I'm watching a lot of YouTube videos on like teaching me trading. I'm listening to books, like there's a really good book called Trading in the Zone. That's written by a professional, right? A professional Wall Street dude wrote that book. Yeah, educate yourselves, guys. It's gonna serve you well. You're gonna get paid. You will strengthen as a trader if you go out and take the time and invest your time and effort into learning. Because there is money to be made in these markets, and if you learn your lessons and you're disciplined and you're patient, you'll get there. You know. Just think of every day that ticks by, and you're learning lessons and you're developing your skills. You're getting better and better than you were the day before. That's, I'm better than I was 6 months ago. Way better, way better. I've been scalping with small money, which afforded me to put it into my margin here for my big trade. I've also been working a job, which helps me put money into the margin. This is money that I'm happy, like, look, it's not going to change my life if I lose this money. You know, it's not the end. If I lose 3.5 US, 3.5 grand US, like it sucks. It's very painful, but it's, you know, it's an expensive lesson that I don't want to have to learn. I know the potential of loss. I understand. This realized P&L, that's been fluctuating. There's a point where that was positive. So they were actually paying me to be in this position. But right now I'm about 20 bucks underneath in fees. But yeah, like, look, 6 months worth of sitting in a position only came out at 20 bucks of fees, right? And it fluctuates. It goes up and down all the time, depending on the funding rate up here. I'm 2 years new, many mistakes. Yeah, it's a tough school. It's not easy. You know, even the pros stop out. You know, they stop out of positions all the time, and they lose money. You know, they'll have red days where they weren't correct on their, you know, analysis. We all have them. There's people out there that try and pretend, like they try to paint the picture that they're like these master traders with, you know, 8 months experience or, you know, 12 months, 18 months experience. And they, you know, they try to paint a picture that there's some, you know, that they've figured it out and it's all easy and it's, you know, but look, I don't try to pose as that. This is the whole point of me showing you this. It's because it's real. It's like, this is what happens. And I'm not a good trader. I'm not. I'm doing my best to build skills to get there. But it's a common journey of everyday people. Hopefully you guys can relate to that. Sure, it's relatable, right? DC Woodworking, thanks, man. Market cap has pushed past $1 trillion again. Excellent. That's fuel for the bulls. Like, knowing that, it feeds the sentiment that you know, that there's hope. Now, did we get above our D, or did we double top it? Let's see. That sounded funny. Did we get above our D? I think it was perfectly met as resistance. What's the high? 2351550. What's the high at 23514? Okay, so it's a little bit below. You can see the gap. See, it didn't quite hit, but we tried. We tried. Let's go down to a small time frame, see what's happening. I see. So we're trying to build up a triangle, a very short-term triangle. I don't know where D is. Like, at the moment it's there, but this can change. Obviously this can come down and a D can be created here. It could become like a descending triangle like that. It could become a falling wedge like that, or it could become a flag like that, or it could just completely fail and do a Bart Simpson where it goes up, chops sideways, and then drops. Bart Simpsons are very annoying. No one likes Bart Simpson in trading. Unless you can identify it and trade into it, then it's great. Where's our D? You know, where is this candle? Where is this pullback gonna stop? This is what I see as an ABC correction off an impulse, because it's A, B, and then C. Now the C can land anywhere, really. It can even become a new 5-wave down. We hope that doesn't happen, but let's see. So right now we're dealing with that. It's still painting, it's still drawing out, like it could be this candle that draws out the D. But we know we have an ABC. We're just, yeah, we're trying to figure out, is this going to come down and double bottom? Where's the support? Where's the support? Look at this. What did Litecoin end up doing? Oh, it's still alive. Litecoin. Wow. It pays to be light, guys. You can get lifted up off the ground. Pardon the pun. Look, this is cool though. This is interesting. It's rare to get this on the weekend, like especially on a Sunday. Sundays are usually dead flat and quiet. So this is cool. This is exciting. Litecoin, still alive. Litecoin. Notice how like every move up you get, you add more risk. If you were to get in here, like it just gets riskier and riskier. But look, this thing could rip all day. It's up 7%. I'm going to keep following this all day, see what happens. I'll leave the stop loss there. And let's just, you know, let's just see what happens with that. I'm not saying that I took profit or you know, that I'm still in it. Like, this is just looking at what happens with the price. By no means, like, am I saying this is a win or anything. I'm just, it was an example to begin with. It just so happened that it went up into the profit zone, so that's cool. We're basically at our previous weekend's high as the sticking point, and we're still looking okay. Still like sort of hanging up there, isn't it? How long's this stream been going today? 2 hours and 13 minutes, and I don't feel worn out yet, so that's cool. Because there's stuff to look at. You know, there's things to talk about, so it's yeah, it's what makes it a bit more bearable to stay on and talk for this long. But look at the 15-minute Bollinger Band. Look at that really nice squeeze, and then the pop. You know, popping out of the squeeze is what gets you the reward for taking a position in the squeeze. You know, when something's squeezing, I'm going to start talking about the squeeze more often because it can be the recipe for something big. Like when things are tightening up like that, you know, things are bound to break out. I just didn't see it happening this soon. I thought it would be maybe Monday, maybe tomorrow, right? But that's cool. We got ourselves a new weekend high. I'm gonna have to adjust this. What is the high? 23492. 23492. 23492. There's the high. Okay. Lock that in. This has sent a really strong message to the bears, I feel. That this ain't dead yet, guys. This has got some life in it. The trend is your friend until the end. I've heard that from a few people before on YouTube. The trend is your friend until the end. And remember, picking highs and lows is a fool's game. So we don't know where the end is. So the trend is your friend until the end. We don't know where the end of the trend is. We can identify the end of the trend various ways for certain indicators, EMAs, levels of price, support and resistance. Depends who you ask. Now, what was this push? Could this have been a liquidity grab? Possibly. Was there a lot of short liquidations, you know, at these levels? Probably. A lot of people taking shorts like through here, expecting a crash. Makes it too easy for the market maker to just push price to that level and liquidate them. You have a look at RNDR. It's broken out over the last few weeks. Yeah, sure. RNDR. Render. Where's render? There's render, RNDR. Nice. Okay, I'm gonna go to daily. Reset the chart. Yeah. Start of the year. Riding up like a lot of the alts are right now, so that's cool. Yes, what a big day yesterday. 37% up for render yesterday. Saturday, that's a Saturday performance. And today, it's off to another good start for a Sunday. This is cool. This is Dash, Litecoin, Render, OMG, ETC, M, Mask, Zen. These are all doing pretty well out of the gate. First hour of the day. First 2 hours. What are we? An hour and 45 minutes into the daily candle for Sunday. Last weekend it was the Saturday, which was the good candle. Today it's the Sunday. It's giving us the love. Where's it at? What's the peak here? 2% from that point that we FOMO'd into it. Very cool. Bitcoin, yeah, it's we'll see. Seems like it's fading, but looks like we might have our D finally. Let me go back to this ABCD thing. A, B, C, and then D potentially, right? How are we gonna handle this? Can you see the bands are coming back together, the Bollinger Bands? Because we've been traveling sideways. Remember, Bollinger Band squeezing is the recipe that you want for a position. Not financial advice, but that's when the bands contract like that, it builds a case for taking a position, because then what comes after contraction? Expansion. And if you took the position right, you know, whether you're short or long, depending on the direction, yeah, you get rewarded for taking the risk in that squeeze. But you don't get reward. You get punished more often than not for taking a position in an expansion, right? Or late into a breakout. You get punished. Try to sit on your hands. Try to sit on your hands during like when something's moving, because at least that way you're not losing money. You're not making money, but you're not losing it either. So it's better to be patient and wait for the setups, guys. Like wait for the Bollinger squeeze. DC Woodworking says, Rick, do you remember the stock I had you look at a month or so ago? APPH. I sold way too soon, but made good trade on it from 0.40 to $2.50 or so. Wow. Yeah, I'll have a look at it. APPH. RNDR still looking pretty cool. I'm gonna see if it's in this list. APPH. It might not be in here. Let me go to my other list. Now, is APPH a stock or is it a crypto? It's not a crypto. I'm guessing it was a stock. Or App Harvest. Oh, vaguely. I vaguely remember you maybe saying. Whoa. Yeah, that was trending really nice. Yeah, stock. Okay. Very nice, dude. Well done. You were talking about it when it was at 40 cents? Ah, shit, man. That's low. That's, oh, I see. 50, yeah, 50, 52. I don't know where you got in, but yeah, damn it. Wherever you got in, it's profit. Because it's at the highest it's been all year, so. You bought it around 70 cents? Well, dude, congratulations. That was a beautiful entry. Did you buy it on this pullback here? I can see a pullback to 70 right there. Or did you buy it on the way up? Because you bought it. Okay, let's circle it. You bought it in either A or B. There's no other place you could have bought it. Somewhere in A or somewhere in B. Both fine. Doesn't matter. But yeah, that's cool. That's great. It's where did it come up from? 70. There's 70. It's come up 280%. That's good for a stock, huh? Very nice. Let's go back to Litecoin pullback. There's the top there. 2%. Still alive, but look, that's a severe little pullback there. Be careful on Litecoin, guys, if you're long. What's Bitcoin up to? Oh, it's failing. Okay. Typical. Typical lately. Are we getting a descending triangle like this? Maybe. Or is it just going to completely collapse here and then go like do a falling wedge? It could go falling wedge, which is still bullish, right? It's a bullish pattern, a falling wedge. Okay, there's the descending triangle, and now is the falling wedge. I'm just holding my mouse on price, and then it'll push the pattern to where it wants to go. Okay, right there. It's a falling wedge so far. So we've gone from symmetrical triangle to descending triangle to falling wedge. That's the progression. And then from falling wedge, it can turn into a bull flag. That's the final pattern, is a bull flag. And then after that, it's failed. Like it's, there's nothing after that. It's just down. Yeah, this D is still pulling in. So if you took a short in that squeeze there, so far you would be in profit. Hindsight's 2020, as always. It's a pretty wacky looking falling wedge. Saleh says, I got a short up there, still in profit. Very well done. Nice. I've seen it. It's been a bit of a trend lately for Bitcoin. Any push to optimism produces good entry to a short, you know, because unless it's like an actual move up, like a proper, like committed breakout, it's gonna come down, you know. That seems to be the theme lately. Especially it being the weekend, you know, we're not getting any giant breakouts, I don't feel. This was a good weekend move though. A new high for the weekend. Very cool. Target previous third swing in 1 minute down. Okay. How long's this stream been on for? 2.5 hours. Not bad. 2 hours, 28 minutes. That's a good Sunday. Hanging out with my YouTube crew. Hanging out with my homies. Watching the charts. Watching my position tease me further. That's right, we're down here, aren't we? Falling wedge. We just had a Kumo twist on the cloud. I fall back to being $100 underneath and falling. I think the worst this unrealized P&L got was negative 1400. Kind of gut-wrenching to look at, but it was all right. As long as the liquidation price is comfortably distant, you know, that's all I care about. You see, I'm almost at my... See, that's the money I have in at the moment. 333.3. But my equity, because that shows you what you have if you were to sell. Your equity is like if everything was just balanced. So I'm not that far off, like from where I was. I'm only about $100 down. What would be the price for me? The price for freedom for me is $100 right now. The price to be liquid again. That's nothing for some people. It's expensive for others, but you know, what price do you put on your time? Like if I had to wait another 3 months, $100 ain't too bad to get out. But look, I think I'm happy to sit in this. If we dip down to 20K, I'm gonna buy more. That's what I'm doing. Like that's just how I'm playing it. I'm not signing out of this position because I'm just being stubborn. And it's probably stupid to stay in it, right? But whatever. I'm not doing anything. Letting it do its thing. Well guys, as Bitcoin starts to relax back into its status quo of like $23,000, probably going to wrap the stream up. Once again, as always, thank you for tuning in, guys, and all the best with your trades if you're trading. Thank you so much for tuning in and smashing the like button. I think we've had the most people in a stream than I've had in a long time. I think they got up to like 33, 34 people at one point, so that's cool. But yeah, take care. Thanks for tuning in, and I will catch you on the next stream, likely tomorrow, for the Monday Open. All right, take care. See ya.